Roth Capital Partners has had a long history of business with TRCH, MMAT, and now NBH. When TRCH was merging with MMAT, TRCH CEO John Brda signed an agreement for Roth Capital to be the financial advisor for TRCH and sales agent for 100 million common stock. Pursuant to the sales agreement, Roth would issue and sell from time to time up to $100 million of TRCH common stock and receive commissions equal to 3% of the gross sales price per share of all shares sold through the sales agent under the sales agreement. Pursuant to the terms of the sales agreement, TRCH agreed to reimburse the sales agent for its reasonable out-of-pocket expenses, including fees and disbursements of its legal counsel, incurred in connection with the transactions contemplated by the sales agreement in an amount not to exceed $50,000 in the aggregate. TRCH estimated that the total expenses of the offering payable by us, excluding commissions payable to the sales agent under the sales agreement, will be approximately $90,000. It will be interesting to know if CEO John Brda knows if Roth Capital sold all $100 million worth of TRCH common stock in the week of the merger in June 2021. Then 1 year later, in June 2022, Roth Capital bought $50 million of MMAT securities of more than 37 million shares and warrants. From the gross proceeds of $50 million, Metaboard intended on using $5 million for development costs associated with oil and gas activities related to the Oro Grande project in Hudspeth County, Texas. There seems to be a pattern emerging. Roth Capital Partners agreed to be a sales agent for $100 million worth of TRCH shares and financial advisor to TRCH in June 2021. Then exactly 1 year later, Roth Capital agreed to purchase 37 million common stock and warrants for $50 million in June 2022. And now again exactly 1 year later, pursuant to the S-1 filing on June 23, 2023, Roth Capital Partners has agreed to be the placement agent for 40 million shares of NextBridge Hydrocarbons. Google Roth Capital Partners, click on the first link, put the arrow on Sector tab and choose the energy category. On the energy page, it states, Roth's energy team has over 20 years of industry experience and offers a full array of investment banking services ranging from capital formation to advisory/debt restructuring. We are a proactive, value-added partner that builds solid long-term relationships based upon a deep understanding of our clients, their business objectives and goals. Our experience spans multiple commodity cycles with transaction history across major producing basins in the U.S. and select international basins, both onshore and offshore. They have experience in exploration and production, liquid natural gas, oil field services and technologies, water management, mineral management, field infrastructure and construction. These are the exact skills that NextBridge needs to move to become a world-class investment opportunity. The energy investment banking team is composed of Alexander Montano, who is the managing director and head of energy investment banking, Director Otelia Thailand Chen and Vice President Dustin Cabrera. These three along with the NBH board will have more than 75 years of experience in the energy industry. What is interesting is that Alexander Montano is the managing director and head of energy investment banking that was the signing Roth Capital member to become the sales agent for $100 million worth TRCH shares with TRCH CEO John Brda in June 2021. I pose the question again, did Roth Capital sell all $100 million worth of TRCH common stock in June 2021 as per their sales agreement? Pursuant to the prospectus filed on June 14, 2021, links in the description box. If Roth Capital sold all 100 million TRCH shares, then the sales agreement will automatically end. However, if any portion of the 100 million or the full 100 million TRCH common shares are not sold, then these 100 million securities may be later made available for sale in other offerings pursuant to the accompanying prospectus. This is something to consider, because in the scenario that Roth never sold any of $100 million worth of TRCH shares or only sold a portion of the $100 million TRCH common stock, then Roth would now also hold a large amount of MMTLP Series A preferred shares. This is because the TRCH and Metaboard announced on June 11, 2021 on a one-for-one basis, shares of our Series A preferred stock would paid to the holders of common stock as of the close of business on June 24, 2021. Also, who did Roth Capital sell $100 million worth of TRCH common stock? Was it to retail or their private investors? Now let's turn our attention to the recent S-1 filing by the NBH board on June 23, 2023. There are 8 points in the first paragraph on page 2 which states, we are offering directly to selected accredited investors up to 40 million shares of common stock, $0.0001 par value per share. We have engaged Roth Capital Partners to act as our placement agent in connection with this offering, the placement agent. The placement agent may be deemed to be an underwriter within the meaning of Section 2(a)(11) of the Securities Act of 1933, as amended. The placement agent will have no obligation to buy any of the shares of common stock from us or to arrange for the purchase or sale of any specific number of shares or dollar amount of the shares of common stock. There are no arrangements to place the funds raised in this offering in an escrow, trust or similar account. We have agreed to pay the placement agent a cash fee equal to 5% of the gross proceeds from the sale of the shares of common stock sold in this offering. We have also agreed to reimburse the placement agent for its reasonable out-of-pocket expenses up to $150,000. Because there is no minimum offering amount required, the actual public offering amount, placement agent fees, and proceeds to us, if any, are not presently determinable. See Plan of Distribution on page 73 for more information on this offering and the placement agent arrangements. So let's go to page 73 and read the Plan of Distribution to understand Roth Capital's agreed-upon placement agent arrangements. The first paragraph has 4 main points. 1. Roth Capital Partners, LLC has agreed to act as the placement agent in connection with this offering subject to the terms and conditions of the placement agency agreement dated, which is blank as this offer agreement is not yet officially accepted. 2. The placement agent is not purchasing or selling any of the shares of common stock offered by this prospectus, nor is it required to arrange the purchase or sale of any specific number of shares or dollar amount of shares of our common stock, but has agreed to use its reasonable best efforts to arrange for the sale of all of the shares of common stock offered hereby. 3. Therefore, we will enter into subscription agreements directly with institutional investors in connection with this offering. 4. The placement agency agreement does not give rise to any commitment by the placement agent to purchase any of our shares of common stock, and the placement agent will have no authority to bind us by virtue of the placement agency agreement. I interpret this to mean that Roth Capital Partners is not obligated to sell any of the 40 million NBH shares, and they cannot be held liable in the event that they are unable to sell any NBH shares. That said, Roth Capital will use reasonable best efforts to arrange for the sale of all of the shares using subscription agreements directly with institutional investors in connection with this offering. So we must now look deeper into the meanings of placement agent and subscription agreements. Investopedia defines a placement agent as an intermediary who raises capital for investment funds. A placement agent can range in size from a one-person independent firm to a large division of a global investment bank. Roth Capital is a global investment bank hired to be our placement agent. The capabilities of experienced placement agents, however, go well beyond mere introductions. Some placement agents provide value-added services, such as preparing marketing material, formulating a targeting strategy, organizing roadshows, and even negotiating on behalf of the fund. These services may be particularly useful for new fund managers. Placement agents are especially helpful for marketing a fund in places where the fund manager has limited contacts, as an introduction from a reputed placement agent enhances the credibility of the manager. Alternative sources of capital, such as sovereign funds and ultra-high net worth individuals in many emerging markets and far-flung areas around the world, highlight the productive role of placement agents. In relation to our NBH situation, a subscription agreement is a two-way guarantee between a company and a new shareholder, subscriber. The company agrees to sell a certain number of shares at a specific price and, in return, the subscriber promises to buy the shares at the predetermined price. When a company wishes to raise capital, it will often issue shares of stock for purchase by either the general public or through a private placement. In our situation, NBH is issuing 40 million shares for Roth Capital to find private shareholders, subscribers, through a private placement. A private placement is a sale of stock to a limited number of accredited investors who meet specific criteria. The criteria for accredited status include having a particular level of investment experience, assets, and net worth. As shown earlier, the energy division of Roth Capital Partners has extensive experience in exploration, production, E&P, liquefied natural gas, LNG, oil field services and technologies, water management, field infrastructure and construction. Roth Capital directors managing NBH agreement would have a list of clients they have done business with in the past that would be interested in energy investment assets, especially considering the current geopolitical situation around supplying North American oil and gas to the majority of Europe. BP, Equinor, Shell, and Exxon have all announced termination of their ties to the Russian oil industry. Shell agreed to sell off its nearly 20% stake in Rosneft, the Russian state-controlled oil company. BP is abandoning $25 billion of oil and gas investments in Russian Rosneft, which accounts for nearly half of BP's oil and gas reserves and a third of its production. This will result in a $25 billion loss. ExxonMobil abandoned $4 billion of oil and gas investments in Russia. These major energy providers will seek to acquire oil and assets in stable regions of the world. The benefits of owning and developing the Oro Grande Basin are numerous. 1. It is located in Texas. 2. It is an inland oil basin. 3. There are nearby natural water supplies for oil extraction. 4. It is on privately owned land, and 5. Therefore safe from federal government green policies. 6. There are refineries in close proximity. 7. The oil and gas basin are located over open land free from interference from city traffic and populations. This begs the question, why does NBH need to sell 40 million shares in the first place? It is to finance the following debts, leases, interest payments and drilling obligations. 1. NBH debt obligations include the $15 million principal balance outstanding under the 2021 note with Meta, which incurs interest at 8% per annum and matures on March 31, 2023. 2. On December 21, 2022, NBH issued an unsecured promissory note in an original principal amount of up to $20 million in favor of McCabe at a per annum rate equal to 5% and matures on June 21, 2023. And 3. The Oro Grande project leases representing approximately 134,066 net acres in the Oro Grande Basin in West Texas are subject to expiration in 2022 if we fail to drill 5 wells as obligated by March 31, 2023. Under each of the 2021 note, the loan agreement and the 2022 note, if NBH raises additional capital through debt or equity, or any combination thereof, of at least $30 million before the respective maturity dates, we will be entitled to extend maturity to October 3, 2023 and repay the outstanding balances in 6 equal monthly installments beginning in April 2023 up to such extended maturity date. In summary, 1. Roth Capital has worked with TRCH since 2018 and with Meta since 2021. 2. Roth Capital is a relationship-driven, full-service global investment bank with extensive experience in the oil and gas energy sector. 3. Roth Capital is being hired as a placement agent. 4. Roth Capital is being paid a cash fee of 5% on the gross proceeds plus up to $150,000 out-of-pocket expenses. 5. Roth Capital has agreed to use its reasonable best efforts to arrange sale of all of the 40 million shares of NBH common stock. 6. Roth Capital will enter into subscription agreements directly with institutional investors. 7. Roth Capital will not be liable if no shares are sold. 8. NBH needs to raise $30 million to pay interests on loans, leases, and drilling obligations. 9. The price of NBH shares are not determined and will depend on demand and negotiations from potential buyers. The following chart shows the minimum prices Roth Capital needs to sell each share for and the equivalent 5% commission paid to Roth Capital. At a bare minimum we need NBH shares to sell for 75 cents, but this will mean NBH survival is not guaranteed. To be safe, we need at least 80 cents per share, so even after Roth Capital deducts their 5% commission, we are left with around $30 million. But the best-case scenario is that there is a bidding war between the large oil and gas players such as Exxon, British Petroleum, Shell, or ConocoPhillips to obtain this enormous basin of oil. I argue that these companies will want to re-establish their oil reserves and production capabilities from the loss of abandoning their multi-billion-dollar oil and gas assets in Russia. Finally, I would like to mention that this video is strictly entertainment and made to create lively discussion and to spread my ideas and information. Nothing in my videos is financial or legal advice. I encourage all viewers to read the information and develop and contrast their own ideas with mine. Please like, comment, subscribe and share.